Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and this is the first of a series on investing. Now let's go ahead and get started. First of all, how do people gain wealth? Well, wealth is typically generated through investing, whether it's an investment inside of a business or it's personal finance. Investing is typically not a get-rich-quick scheme. So if you're thinking of becoming a Mark Zuckerberg overnight, where you create Facebook and become a multi-billionaire with $25 billion, that typically is not going to happen. Now, for those who are beginners, investing can be intimidating, but it often becomes easier when you learn the buzzwords or the vocabulary. This tutorial will help you to learn more about earning wealth by learning stuff like compounding, stocks, and interest. Remember, there is never a stupid question, so if you have any questions, always remember to leave a comment below throughout my series on what investing is, or later on when I talk about more complicated subjects. There is never a stupid question, so always ask, and ask. What is investing? Investing is the process by which someone puts money into an endeavor in order to obtain income or profit. Another way to look at this is putting money to work on your behalf. The more you do it, the more money works for you, whether you sleep, go to the movies, or even work your full-time job. So basically, investing is a process by which you take your money, you invest it, the money works for you, and it makes you additional income. That income can be used however you want, and that added income can make your life more comfortable, or you can always reinvest it, and the money is always there for you, and even compounding upon itself, which we will talk about in a later video. But again, it's always working for you, no matter what activity it is you're doing right now. The ways you can invest. Stocks. Stocks are typically investments inside of companies. Bonds. Bonds are typically a loan which you lend either to an individual, to a government entity, or a corporation. Mutual funds. A mutual fund is basically a fund where it pulls money from other people into a fund, or basically a fund is where money is gathered and invested into both stocks and bonds. Options contracts. Basically, an options contract is an obligation that gives you the right to buy something, but it is not obligatory. It just gives you the option to buy it if you so desire. And of course, there is many nuances to options and derivatives, which is a much more complicated subject, but I'm just introducing you to it so you know that it exists. Exchange traded funds, which is basically a mutual fund, but it can be actively traded on a stock exchange, and the fees charged on an exchange traded fund is typically lower. Currency exchange, or more importantly foreign exchange, is where somebody takes a currency, they convert it into a different form of currency in hopes that their new form of currency will appreciate in proportion to the other currency they have, so that they can take that currency and convert it back into the original currency in hopes of making more money. Of course, we will talk about more. We will go in much more detail about Forex in a much later video. Real estate. Imagine buying a home and renting it out to somebody. Chances are you're inside of a home right now. Chances are you've rented a home before, or you own a home and you have the option to lease it out to somebody so that they can live inside of it and pay you rent money. That is a real estate investment. Tax liens. Tax liens is basically a short-term loan to a government where you basically pay the taxes on a property on behalf of someone else, and that person has to pay typically anywhere from a 16% to a 30% fee back to you for a late penalty. which the government forwards back to you in exchange for lending the money to the government or the state government for the shortfall in tax revenues they were supposed to receive from a property tax. Intellectual property is where, again, somebody has some idea, some invention, some form of intellectual idea, something that's an idea basically, in the form of perhaps an invention, a book, something like that, which you can always license out to somebody and earn royalties. Commodities is something that is like gold or silver that can appreciate over the short term so that you can at a later point in time sell it and make money. A futures contract is basically, again, very similar to an option contract, but it gives you the rights to secure a price at a previous point in time for future delivery. And again, it's not a full definition, but I'm just exposing you to the idea of what a future contract is. Certificate of deposit is basically where you give money to a bank into a certificate of deposit account, and they basically pay you an interest in return for you allowing them to borrow money from you. Peer-to-peer lending is where you lend money through an intermediary to another person in hopes of earning interest in the future. And we will have discussions about every one of these asset classes later on at a different point in time. I hope that helps you guys out on ways you can invest, what investing is, and of course, why we're even talking about it. Well, you guys have a nice day, and if you have any questions, always remember, leave a comment right below.